Hello YouTube, it is your friendly neighborhood LPL financial advisor Mike Campagna. I am the education coordinator for One Group Retirement Advisors. Today, I'm speaking to those who operate businesses of all sizes and in all industries who are worried about cash flow this year. If that applies to you, now through the end of the fiscal year is an important time to consider every option to decrease your soft costs. One unlikely place you may find savings is in your insurance and risk management plan. Here are 5 ways to use risk management and insurance tactics to lower your soft costs and tackle rising premiums. Number 1. Earn auto insurance discounts for safe driving. An employee and listed commercial auto driver can be eligible for a defensive driving discount on a small commercial non-fleet policy. The discount is provided after completion of a DMV-approved defensive driving course, now offered online or in person. Completing one of these courses could make the driver eligible for the discount on both their personal and commercial auto policies for 3 years. That's a nice savings for 6 hours of online training. Number 2, claim free, claim your discount. The New York State Workers' Compensation Rating Board offers a merit rating program with a maximum credit of -8% for a claim-free period of 3 years. Check with your broker to make sure you are receiving any merit rating credit that is due to you if you've had no claims. Number 3, increase deductibles to decrease premiums. This solution may not be right for everyone's risk appetite, but it's a potential method for saving costs. Consider increasing your property, liability, auto, and/or health insurance deductibles to decrease your premium costs. Higher deductible over years can deliver sizable savings. One very important thing to remember is that when you're increasing medical plan deductibles and/or co-payments to decrease premiums, you're increasing the out-of-pocket costs to your employees. This is a careful balancing act that you will want to discuss with your benefits advisor. If you choose to pursue this option, your benefits advisor can help you find a happy medium to satisfy both parties. Number 4, group plans for specialty coverage. Consider offering voluntary group plans as part of your employee benefit strategy. For example, you may not offer dental or vision coverage, but you have staff members who need those benefits. When you offer a voluntary group dental or vision plan, your employees can take advantage of your group pricing, but you don't have to contribute to the premiums. It's a win-win for both parties. Number 5, high deductible health plans. If you don't already offer a high deductible health plan, consider offering one. There are tax advantages to you as the employer and to your employees when they use an HSA bank account in conjunction with your high deductible health plan. Employee and employer contributions into a health savings account are pre-tax, earnings grow tax deferred, and qualified distributions for medical expenses are tax-free. Additionally, when HSA members become Medicare eligible, they can use those funds to pay Medicare Part B premiums. Check out the What is an HSA video on the channel to learn more about health savings accounts. Many insurance policies renew on January 1st, which means now is the time to be preparing. Make sure you're aware of all of your options for cost savings ahead of time and to discuss them with your insurance advisor. Taking a few simple steps now could make a big difference to your bottom line in 2021. 2020 has been the year of the unexpected, and running a business in these conditions is far from easy. As you know, finding extra savings can go a long way for sustaining business through these difficult times. I hope you found this video helpful, and I wish you well. Thank you.